Good morning, good afternoon, good evening, and welcome back to episode 26 of Everything Meta. Joey, how are you today?
Hey, I'm good, Ken. How are you?
Doing very well. As of the time of this recording, we are aware of the loss of Queen Elizabeth II, and we just want to extend our condolences to anyone affected by her loss. We are very sorry. That said, we are going to move on with the show. I have a clip, as you can imagine, and we're going to respond. Check this out.
Are we seeing a new shift in sector sentiment?
Hey, good morning, Seema. So it's not necessarily that there's been a new shift in consumer sentiment and investor sentiment. It's just the fact that ongoing problems for this industry are gaining in momentum. Crypto prices tend to move based on one of two big things. So we've seen the crypto prices react to regulation, more on that in a minute. But then also it has a lot to do with macroeconomic events. So when we see the Fed, boost up those interest rate hikes, we see crypto prices move on that. The Fed chair recently made it clear that we're likely headed for another big bump up in September. That'll suck liquidity out of the system. Never a good thing for a risk asset like Bitcoin or Ethereum. On the regulation front, this week is the deadline for federal agencies to respond to President Biden's executive order on crypto. So we're expected to see their recommendations for how they plan to regulate on everything ranging from the environmental implications to law enforcement to consumer protections. We recently had the House Committee on Oversight and Reform ask that major crypto exchanges like FTX, Binance, and Coinbase get back to them on what they're doing to actively protect their consumers. Meanwhile, the FBI is getting involved, and they're asking that DeFi or decentralized finance protocols beef up their security measures as hacks wipe out billions of dollars in investor money that has been stored in their crypto wallets. So the level of accountability from regulators really stepping up in an appreciable way in the last year. Not to mention the fact that three of what were once titans of the crypto industry are now in bankruptcy court in the Southern District of New York. So investor confidence has really been rocked in the last few months, Seema.
Yeah, laundry list of negative headlines. McKinsey on.
Do you believe that the price of Bitcoin has anything to do with what you just heard?
I mean, yeah, yeah. I think that people do trade the news. I have several friends that are, waiting for the tightening, the quantitative tightening, and the midterms, right?
Yeah.
And they wait for the Fed meetings, and they swing trade these things, with leverage, right? And they do very well because I think that it's almost like a self-fulfilling prophecy sometimes that if everybody's thinking the same thing, sometimes the market moves the way that everybody sort of wants, unless there's some giant whale that gets involved. I think Bitcoin is a little bit strange in a way. It has the largest market cap. People use it for hedges or something, right? And goodness, I think if things can be regulated, right, there's two directions you can go, right? It's either completely decentralized, right, with no leadership at all, sort of like gold, right? And so that's where Bitcoin would, I think, fit in, is with that complete zero, centralization. And then if you move on the other side, I think that things like HBAR, things that are preparing, the new ETH 2.0, things that are preparing for regulation will also do well because they will open the doors to parties that were not previously in crypto, right? Like people that have to follow regulation and want to abide by certain practices. Once they have a structure that they can work within, they'll feel more confident moving into a market. And you might see a lot a lot of money come into crypto, right?
Mhm.
And I think that the certain projects that are already built that way, like regulation and compliance first, things like HBAR, put that in your title, put HBAR in your title. Things like HBAR, I think will probably do very well if you can find a use for them and people build within that ecosystem. I still think, you know, EVM should be the standard, right? So anything that's EVM compatible should probably be the standard, and you know, as opposed to diverging from that too much. So yeah.
Well, you walked into a perfect segue.
Top of these price swings, Ether, which is outperforming Bitcoin on the year by a wide margin, finally rolling out this highly anticipated system upgrade. What can you tell us about it, and how do you expect investors to respond?
So this upgrade is years in the making. It's called the merge, and it's a very significant event. It's going to be historic for the entire industry, not just for this blockchain. Monday was the last step that needed to happen ahead of this big merge. It went well. We're expecting the upgrade to take effect sometime between September 13th to the 15th. The reason that it's so significant has to do with a couple of different things. So one, minting Ether, which is the token associated with that blockchain, will suddenly consume a whole lot less energy. And then the second big point here, and this is why analysts think that Ether has been outperforming Bitcoin as of late, what's expected to happen post-merge is that Ether will become a deflationary currency. And so when you have a reduced supply of Ether, the thinking is that those holding the Ether token, there will be a greater value proposition there, you know, a basic supply and demand dynamic. And that's why you've seen the call put ratio indicate a lot of investor confidence. And that doesn't even get into all the technological benefits that are unlocked by this upgrade, Seema.
That is
You told me not long ago that you were very bearish on ETH in terms of, I don't want to misquote you. Do you
Retail.
Retail. Got it.
Yeah.
Where are you with this? Are you factoring in the merge? Like, is there anything that you think will come out of this that maybe changes your sentiment or changes the way that you're projecting ETH to be going forward?
Well, I think that ETH has proven that it's here to stay, right? It's here to stay. You know, now to become, you know, instead of miners, right? Like people investing heavily into mining, you know, software, hardware, everything, the whole shebang. Now they can just buy ETH and validate, right? They can stake their ETH. So I think that if people can expect a semi-safe return, right? A semi-safe return from ETH based on that, like a sort of predictable return on ETH, then I think that you'll see people like institutions that are, you know, maybe we're investing in mining ETH and acquiring ETH. Now, I think that if they can get like a 8 to 15% per year from staking ETH, you might see a lot of money come in to buy ETH to stake for a small percentage return each year, right? And that's how the new ETH would be, you know, like anyway, that's cool, but that's not retail, right? You know what I mean? That's not retail. It's not going to make ETH more scalable. It's going to turn ETH into like you know, a metal, for instance, right? Like that's what it would be. ETH is still not scalable, right? You know, even with the upgrade.
Only in crypto is 8 to 15% return, a small return. You gotta love crypto.
Yeah, I mean 8 to 15% is great. I mean, there's lots of real estate people out there that follow the same path, right? You might see new ETFs open up, right, on the stock market for ETH, specifically for the purpose of acquiring ETH to stake.
Yeah.
For 8 to 15%.
Yeah.
Yeah. So like that, in terms of like when you look at the strategy, and I don't know if that's the strategy because I don't talk to Vitalik or anything, right? Like,
Not anymore.
Bro, you know what? I'll tell you what. I'm the Gnosis airdrop. I'm I won't go into anyway. So yeah, I don't know the overall strategy, but if you're looking to attract institutions that weren't previously and only like risk tolerant type of funds, now you can sort of give a 8 to 15% return on ETH for buying ETH and staking it. And if it follows, if you've turned your chart into like a metal, right, then you have a lot of people that invest in metals and commodities, right? Commodities, might say that right. That might see that as a major opportunity. So you might see like $1 billion buys of ETH coming up here, which a lot of people aren't thinking about that necessarily. So I think that it's very bullish. I'm bearish on the retail side. Like there's not a lot of creativity. There's a lot of scams. There's a lot of it's weird. You know what I mean? And you have a lot of psyops out there, guys, where it's like we flipped. I personally think that we have flipped into a bull run, right? Me personally, I think that we have flipped into a bull run. I tried to time that bottom, right, with the monkey launch. Okay. Because I personally thought, okay, like we're gonna flip bull. However, the world news is so bad, dude. Like they cannot stop with like terrible news. So that's where it's like, I don't know. There's a food arm, man, 100% people are going to be starving. Okay. Like you can say that with like they are all the time, right? But coming up here this next year, you can say with absolute certainty that there's going to be regions in the world that are actually starving, right? So
for sure. Yeah. Oh, yeah. And with insufficient water.
Yeah, bro. The rivers are drying up. Yangtze River's dried up. Po is dried up. Another river coming out of the Alps dried up. Like hydroelectric generation in China from that Yangtze is not running. You have a war cutting off, a lot of natural resources in Asia into Europe. Europe is suffering, significantly. People like European countries or something don't want to turn on some nuclear power generation, or they don't want to invest in nuclear power generation or other alternative forms of power generation. So like the Black Sea is blockaded, for commerce, for food, for grain transportation. You know what I mean? There's so like the political climate, the world news is bad. People are saying like, oh, inflation in the US. Like, yeah, it could be bad. People are gonna say like, oh, housing crash coming. It's possible, but really, like what it is, you might see more foreclosures, right? More defaults coming because the banks have had to postpone what they were working on prior to COVID. Right. And so they have like a backlog. It's not necessarily, the best thing for everybody is if anybody is behind or in default or whatever, they can restructure, right? They can restructure and continue on with the new product or whatever it is, right? It's not that there's so many. I mean, there's a ton of people that did not pay for a while, but it's not that so many people are in new default. Right. It's that there's a lot of old defaults that were never able to be enacted on. Right. So it's you need a bit of a reset. Right. A lot of money was introduced into the world during COVID. And so, you need some tightening. Right. So it's normal, and you might reset to like before COVID, type of situations and maybe even previous. So anyway, world news really bad. Bitcoin, I think flip bull.
Yeah.
Bull. Yeah.
You used the word a little while ago to describe Ethereum. Was it boring? You used a word to describe ETH. And I want to say it was something like boring, or it had that general context. Projects, ETH-based project. You said something that reminded me of the thing. Maybe we'll hear it. I'll just play the next clip, and maybe we'll be reminded of what you just said that reminded me right again of what was coming.
Thanks,
On the Crypto Beat. Before we let you go, Kara Swisher sat down with billionaire investor Mark Cuban at this year's Code Conference last night. He shared some of his thoughts on crypto and its future.
Crypto has a place for sure, but what's missing is new applications. Just like in the early days of the internet, we say, oh, well, the internet's old and boring, right? Because we haven't seen anything new, and it really took for mobile to come along to really propel it going forward. And we don't have that right now for crypto. So it's kind of boring, and it's just going to stay boring with DeFi and NFTs as collectibles and maybe some other little things coming along.
So it doesn't seem to interest you?
No, I'm still very interested in still investing, but it's just early.
Okay, Mackenzie, I know you're still there. So your quick thoughts there.
Yeah, so I think that, part of why investors and blockchain developers are so excited about this upgrade is that it unlocks a lot of potential for Ethereum. Why that's important is that Ethereum is the backbone of DeFi. And so you just heard in that soundbite the fact that, they don't feel like there's been a lot of innovation in that space. Not a lot of exciting things happening in DeFi right now. And of course, DeFi has promised to be this bastion of cutting out the middleman, financial services where you don't need a banker or a lawyer. And with Ethereum getting this upgrade, a lot of functionality will ultimately be possible. So we're talking about greater speed, we're talking about greater scalability, lower fees. And so that's what's so I don't know that I necessarily agree. I do think we're going to see big changes in that space.
Oh,
I don't know if you're going to see
your face.
Yeah, I don't know if you're going to see better scalability.
Yeah.
I don't think ETH 2.0 will be able to compete with some of the other blockchains out there in terms of scalability. I think the main thing about ETH 2.0 is that you're able to give without buying additional equipment like hardware, mining rigs, whatever it is.
Yeah.
You're able to give, with some regulatory oversight, you're able to give large institutions, ETFs, funds, entry into buying 32 ETH to stake for a return, right? Like now the mining rig, the validator is a set number of ETH, so they can just buy ETH in order to get that percentage return, as opposed to buying like a warehouse and setting up servers. You know what I mean? It makes it easier for institutions to enter. That's cool. Scalability, I don't think so. Yes, Cuban, I don't know if he's in the trenches, right? I think that when you're a billionaire and you can, buy a large supply of some of these cryptocurrencies, he might be in the trenches, but really the things that our team, I like to focus on, I think there's three main things for crypto, guys. Three main things. Okay. There's hyper financialization, financial tools, becoming your own bank, managing your money, payments, storage, whatever. Okay. There's gaming, right? It's tough because a lot of the major gaming studios, they don't need blockchain. They built all their own software, their backends, their, everything, their payment systems, economies, user ID recognition, right? A lot of the things that you think, okay, I could use blockchain for, they've already done, right? Then science. I think those three things: gaming, science, financial tools. If people, the cool thing about that is there's a lot of gamers and future generations of gamers that are not yet in crypto, right? Sure. And with the sciences, there's a ton of college students that are studying science that are not yet in crypto. There's also large institutions and funds in science that are not yet in crypto, right? And then for financial tools, hyper financialization, there's lots of small businesses out there in the world that are not yet in crypto, right? And so if you're talking about scaling user base, Those three industries I think are really good. The meme stuff, the mystery stuff, that's going to be like mainly for the really hardcore, like deep web DeFi people, right? That are, they're a special breed. You know what I mean? And buy something launches, some random obscure thing launches, and they're like one of the first 10 buys.
Yeah.
And they can buy something that could potentially be $1 billion market cap for like, $100. Buy a large percentage of the supply for $100. So those guys are like the first water droplet,
Right.
that rains down. They don't need the user adoption, to get rich. They just need people to buy after them. So yeah, anyway, Mr. Cuban, I think yeah, three main things. And there are people out there that are building inside of that space. It is a bit diluted. The products aren't necessarily very good yet. There's some financial tools that are very good and interesting. And yeah, I think ETH 2.0, although it might not do anything for retail, I think it does a whole lot and provides an interesting return on what could be, could follow a metal chart like copper in ETH 2.0, and it gives them like a very stable, like, okay, buy this many ETH, stake it, validate transactions, get 5 to 15% per year. That's cool. You might see a lot of ETFs pop up in that regard, and you might see parabolic ETH, right?
Yeah.
So they might have fudded already to buy cheap ETH is the thing.
Yeah.
So
I hadn't thought of that. Purpose of the merge.
Ethereum from its current proof-of-work consensus mechanism to the proof-of-stake model. In short, in the proof-of-work or POW model, the network is secured by miners who have to purchase and run the mining hardware. In this model, the miners consume electricity in exchange for block issuance and a portion of transaction fees. In the proof-of-stake or POS model, the network is secured by validators who have to stake ETH in order to validate the network. In this model, the validators don't consume much electricity. The transition to POS aims at making Ethereum more energy efficient, more secure, and lays the groundwork for enabling more scalability with sharding later on. The move to POS was one of the big milestones in the original Ethereum roadmap, and research began before the Ethereum network launched. Instead of transitioning Ethereum to POS in one huge and potentially dangerous change, the Ethereum researchers and developers decided to split it into two steps. The first step, launching the Beacon chain, was successfully executed in December 2020. This allowed for creating a separate parallel POS chain that could be tested in production for a period of time without having any direct impact on the already existing POW network that secures hundreds of billions of dollars of economic activity. Another important reason for launching the Beacon chain earlier was to give enough time to stakers so the amount of staked ETH can be sufficiently large to secure the network at the time of the merge. When making this video, the Beacon chain had over 400,000 validators and over 13 million ETH actively staking. The merge is the second step in the transition to POS, which merges the consensus layer of the Beacon chain with the EVM state of the Ethereum POW chain. More on this later in the video. The transition to POS aims at reducing the power consumption to secure Ethereum by around 99.95%. This in turn brings down a lot of arguments about Ethereum, DeFi and NFTs killing the planet. As a byproduct, it also makes Ethereum ESG compliant, which can be good for more regulatory-driven institutions that may want to start exploring the Ethereum ecosystem. This can also make Ethereum more friendly to gamers and NFT artists concerned about the environmental impact of crypto. Another motivation for completing
I'm cutting it there. Go ahead. You look like you want to respond.
Oh, well, I mean, I think that, it's pretty, I think this is an opinion. It's imperfect. I don't have a perfect mind. The ETH now has a product, right? Like the mining hardware was a product for mining hardware, manufacturers, with ETH as an incentive. ETH was like an incentive prior, right? Now ETH has a product.
Sure. Yeah. What do you think about the improved impact on the environment? Do you think it will help on the retail side?
No, I don't think many retail people. Look, man, most people get into crypto because of greed and expectations,
Mm-hmm.
right? That I don't know how many people, on the retail side are even thinking about the environment, right?
Yeah.
Some are, but like you see environmentalism as like how many people are like hardcore environmentalists? I have a small footprint, you know what I mean? Relatively small footprint. But and I care about nature. I'm out in nature quite a bit, right? Like out on the river. But yeah, I mean, obviously, like the amount of electricity that the ETH chain and Bitcoin and overall consume is like as much as a country. You know what I mean? More than many countries. And so, yeah, moving to proof of stake is probably good. But I think first and foremost, most importantly, now ETH has a product, right? Here's a return. Buy this many ETH, stake it. Buy that many ETH again. How many units of staking ETH can an ETF buy, right? Laying the groundwork for regulation so that like those large funds, I mean, you're talking like huge funds, right, are able to buy, and then that ETH is taken out of circulation, right? So it's not technically circulating. If ETH appreciates, right, just like real estate holdings or something, you might see funds liquidate some of their assets and then maybe repurchase in a different cycle, right? And then stake again and get that return. So you'll follow like more of a real estate pattern, I think, than anything. Yeah, so
cool. Let's talk about
Ethereum from its current proof of work consensus mechanism.
I pressed every button there was. Let's talk about how this works. Let's see.
Let's start with a quick analogy. Imagine Ethereum as a car driving on the motorway. The merge aims at transitioning the car's engine from gas to electric. A key difficulty is to do so without stopping the car. To achieve this, the Ethereum developers built a separate electric engine and have tested it with real stake for over 1.5 years. This new electric engine runs in parallel to the existing gas engine. At the time of the merge, the car will switch to using the electric engine and will stop using its current gas-fueled motor. Doing it in this way, first of all, allows for testing the electric engine in parallel. The second benefit is that we can swap the engines without stopping the car. In the case of Ethereum, stopping the car would mean halting the block production, which would result in no new transactions being appended to the blockchain. As we can imagine, this would be very disruptive, especially for DeFi, so Ethereum developers try to avoid it at all costs. I hope this analogy helps visualizing the merge. Here's a bit more technical explanation of this upgrade. The merge is responsible for merging the user state of the Ethereum network with the POS Beacon chain. At the moment, before the transition to POS, in order to validate the Ethereum network, the node operators run one of the existing client implementations, such as Geth, Aragon, or Nethermind. These client implementations bundle the execution layer, EVM, and the consensus layer, POW. In order to transition the Ethereum network to the POS model smoothly, the execution and consensus layers are unbundled.
Cutting it there. So I like the initial analogy. I think it works for everyday folks. You got a car, you need to switch from one fuel source to another. You don't want to stop. And so you create and test out an alternate fuel source, and you implement it in a way that doesn't require that you pull over. That's one analogy. Do you? I mean, does that resonate with you? Does it sound like a good way to explain it as far as you understand it? Is that something that you would understand? You would
Man,
explain?
as long as they don't mess up, I don't care how they do it. You know,
How it works?
here's an analogy. Maybe it's like a clutch and
Yeah.
flywheel on a standard transmission car.
Mm.
You know, you have rotational speed in the engine, but you have to put it down to the ground somehow. And it's spinning and spinning and spinning. I don't know. That I tried with my analogy. They have
Yeah.
to implement some type of clutch.
Yeah. Yeah. If you're like me, you have to replace the clutch regularly when you. So the merge. I mean, I don't want to belabor the point of the merge. Really, I'm more interested in figuring out how it may help us as we move forward. What do you think the impact will be ultimately? I mean, I can extrapolate if the ETH value is increased, then other projects that are paired with ETH will benefit. Um, so that's one part. I mean, it benefits financially. What about though? What about all the new actors getting in? Like you mentioned, for instance, just the ability to be able to uh, have and hold a certain amount of ETH. And then the difference between how proof of stake versus proof of work goes, meaning then that are we going to be more susceptible to fraud or danger because of people being able to kind of buy their way into the system? Is there anything that you can say to, you as the biggest proponent of ETH I know, how will you calm me and make sure I sleep at night, knowing that that more people who can get in and influence um, the behaviors on the blockchain by buying their way into a larger position of ETH?
Well, I mean, doesn't matter how much ETH you have if you're going to launch some type of scam or something, right? Um, I'm sorry, I'm not sure. I don't know. I think people just will specifically funds for a consistent return can buy in, and their ETH now has product.
Yeah.
I don't know if it'll increase fraud or anything. I'm not sure what the strategies of some of these large funds do. You know what I mean?
Yeah.
Maybe they're fucking. Excuse my language. Maybe they're all real bad.
Yeah.
I have no idea.
All right. So let's pick. I have 4 topics left. I want to pick one.
Okay.
There is client diversity in terms of the merge, the implications of this merge, misconceptions about the merge, and there's risks. Your choice.
I don't know, man. You can pick whatever you want. You can pick whatever you want. I don't think that it's man. Look. I don't think that the merge is like such a huge deal. I think that if ETH, in selling a product, because they're essentially selling ETH, right? They're marketing ETH by saying, oh, buy ETH, stake ETH, get a return, validate transactions. It's fun to validate transactions, right? If you have a large fund, okay, out there that's like, can put it on the books that they bought this much ETH and they staked this much ETH and this was the percentage return, and you have a like they are the guinea pig, and they can demonstrate to larger funds, or their success, then you will have lots of people, maybe treasuries, buy in and stake ETH, right? So other than that, it's not going to be more scalable than other blockchains.
Mm-hmm.
It's not. You know what I mean? It's not made for like that's not what it's made for.
Mhm. So you seemed relatively unimpressed with with the merge, like it's a non-story.
Yeah, I don't think that it's a big. I don't think it's a huge deal.
Yeah.
Yeah.
I'll go with risks then, and see if we can find some common ground here.
A complicated technology upgrade doesn't come without any risks. Here are some potential risks that are worth keeping in mind. Most of them are related to the transition to POS rather than the merge itself, but they are still worth mentioning. After the merge, validators proposing the next block will be known ahead of time as part of the public selection process. This makes proposals vulnerable to networking denial of service attacks. As an example, if the attacker knows they are one of the next proposers in line, they can try to DOS the current proposers, causing them to lose their slots and not include any high-value transactions that now can be picked up by the attacker. The most popular solution to this problem at the moment is a single secret leader election that uses clever cryptography to prevent the attacker from knowing who the next proposer is, while still providing this information to the actual proposer. There are also centralization risks that come with the concentration of stake in pools such as Lido and Coinbase. This can lead to attacks such as censorship or extortion. In the case of Lido, there is also governance takeover risk and smart contract risk. One of the interesting solutions suggested by the Lido community was to allow people who deposit their ETH to Lido and receive STETH to veto any potential dangerous proposals. It's great to see the Ethereum community anticipating a lot of potential risks associated with the merge and the transition to POS.
Yep. Yep. They you know what? They're so smart. You know, if they get hacked, you know, if they leave vulnerabilities open to even smarter people, they're really smart, man. That is how you know, people say like a proof of work chain is actually blockchain. This is pay to play, right? Pay to play. So that is like the one thing. However, it's like sort of bullish, you know, because people will pay to play.
Yeah.
There's still other blockchains out there that are superior, you know, environmentally friendly, have multiple mining algorithms, are proof of work, are decentralized, can't be shut down. Do people use them? Not really, you know, because maybe they never had that extreme parabolic price action because they aren't more easily manipulated.
Mhm.
Right. So, yeah, I mean, you know, pay to play. You know what I mean? And with transparency and all this stuff, right? Then yeah, anything that's out there that somebody smarter, somebody more capable is able to understand it. It does have a bit of vulnerability, right? So
Yeah.
there's always that.
Cool, Joy. You have anything else for him?
No, no, not really. Thanks.
Yeah.
Actually, that was pretty good. I thought there was some pretty crucial key points there that maybe some people hadn't really thought about. You know, there's people that think that the merge, like it'll run up to the merge and then it'll die.
Yeah.
You know, people don't realize that when these funds realize that maybe it's becoming more centralized, it has the ability to be regulated. You know, the world news out there, guys, will get really bad so that people can buy things cheaply, right? And once they have things cheaply, then they can, you know, stake their ETH to validate transactions and get their percentage return and ride the appreciation up. You'll see a ton of good news, euphoric news at the very top. You know what I mean? And that's when you know, people sell. then you'll see a lot more bad news, you know, coming around. So,
Yeah.
how it is, man. You know.
Curate the market conditions to get the best return.
Yeah. Yeah. You don't know, like there's all these wars or whatever is going on out there. You know what I mean? You don't know how much ETH everybody's buying. How much Bitcoin everybody's buying. So,
for sure.
Yeah.
All right, guys. Thanks again for watching, and we will be back next week. And I would like to give a small teaser at a couple things we have coming up. One is a slight change in format. You can still expect the long form from us, but we're going to give you some small segments too for those of you who don't have 30, 40, 50 minutes at a time to sit down and watch us at once. And two, there just may be some giveaways coming soon for those of you who are liking and subscribing and participating with comments on the platform. Take care.